Bank branches are closing faster than they're opening new ones. Last year, they closed over 3,000 branches and only opened 1,000. My name is Darius.
And I'm Carmen. In this video, we are going to discuss why major banks are closing and why you should be your own bank. But before we jump into all of that information, make sure you subscribe to our channel. It is completely free, and hit that thumbs up because it significantly helps us grow on YouTube. Now let's jump into these juicy details. With the collapse of the Silicon Valley Bank in the beginning of 2023, banks have followed market trends and budget constraints to make adjustments so that they can stay profitable. They should always be doing this anyway. But we are seeing this take place because we are noticing more and more branches are closing every single day, and it's just this year alone. So just like the banks, when they are looking at their costs and looking at their budget constraints, we should follow suit because we need to make sure that we are making the necessary adjustments so we can stay liquid or profitable like the banks do, just so that we can buy food, water, and shelter.
Now, the reason why banks are closing branches faster than they're opening new ones is because of how many people are using online banking. According to Bankrate, 27% of Americans are banking online, and another 75% is interested in going digital the next year. So the in-person services are being replaced by online services. What this means is that adjustment is reducing the costs for the banks, but not you.
Dun, dun, dun.
So let me give you a real life example of kind of what we're experiencing here. Since March 2022, the Feds have been increasing interest rates to cool down inflation, which is a cost to you, right?
Yes.
It's a cost to you. Banks haven't been as quick to lend money because of this increase. So you have a lack of access to capital, and the cost of your living is going up, which is another inconvenience to you. So with all this being said, how do you maintain your income? How do you reduce your costs? And how do you increase profits, just like the banks are doing by closing their branches and going online?
Yeah, and really what we're talking about by reducing costs and being more profitable, it's just about keeping more of your money. So how can you do this if the cost of just living is continuing to increase?
Right, because one thing that didn't happen with the banks moving online, it hasn't adjusted the income that we're able to earn from the bank, right? I haven't seen those
no
checking accounts
coming our way.
Yeah, they hadn't reduced the interest on the credit cards.
No, they've gone up. They're ridiculous now.
They hadn't increased the interest that we get from our checkings and savings account.
Yeah, I even called the bank on one of our credit cards just to see if we could get it reduced, and I guess they don't do it on the phone anymore. I didn't. This was news to me, and so they're like, "Sorry, we don't do this anymore." And I'm like,
At the end of the day, the only thing you can do is ask the question. Let them tell you yes or no.
Exactly. Now let's get back to the script. We aren't knocking online banking because it's a huge convenience. We use it every single day. But in this video, what we really want to stress is how you can utilize this mobile banking to enhance your banking systems, which is what we talk about all the time on the Wealth Nation channel. So to explain online banking, to make sure we are all on the same page, it really offers a digital platform where consumers can go and manage their accounts, transfer funds, pay bills, and have access to all of their financial information in the palm of their hands, which makes it super simple. Now, the best part about online banking is because when you add an infinite banking into the mix, you can manage all of your transactions and watch your systems grow all in the palm of your hands. So we want to make sure that you understand how digital banking or online banking can really enhance this whole system. And it's just all about convenience at the end of the day.
Right. Now, let's move on to the banking environment in which we're able to maintain our income, because every time we get paid, we put our money into the bank and the banks pay us from our savings or checking account interest. Every deposit that we make into our savings or checking account, we earn interest monthly on the money that's there. If the money isn't there, you can't earn any interest on money that's not there. So there's
good luck.
Right. So there's an opportunity there. Savings and checking accounts, we earn interest. Whole life insurance, we actually earn interest too, guaranteed interest rates. Now let's talk about maintaining our income in this environment. So when we talk about whole life insurance, we're not talking about whole life insurance as an investment, which a lot of people think. Whole life insurance is more similar to something like a savings account. The reason why I say it's similar to a savings account, I'm not saying it's a savings account, but it's similar to it because you earn interest on the funds that are in your account. So just like your savings account and your checking account, as long as those funds are there, you're going to earn interest on what is in your checking or savings account. you're going to earn a guaranteed interest rate. The difference between the two is the death benefit that you have in the event that you pass away. You don't have a death benefit when it comes to your savings or checkings account. You just hope that whoever you leave your estate to, or you're leaving your money to, they have access to your account. With the whole life insurance policy, you're guaranteed that there's going to be money that transitions over to somebody tax free, whoever the beneficiary is. Now, the convenience of having both of these together is the fact that with your checking account, you're able to pay whatever transactions that you want to pay, but you can get a loan from your insurance policy so that you can not only make transactions, but you can receive payments through your banking system by integrating them together.
Exactly. Now, we aren't telling everyone to just jump for the hills and start opening up whole life insurance policies, because it doesn't work the same way as your savings or your checkings account. We're just using those analogies so that you could see the similarities in how these accounts work. So at the end of the day, we just want you to see that if you put money in a savings account or if you put money in a whole life insurance policy, you are both going to earn interest and you have access to the cash.
That's the point that we were trying to make.
So now the next point that we want to move to is, how can you reduce cost by not getting loans from the bank? This is a super juicy topic that we have a solution for you. Now, this is the reason why we think you should be your own bank in the first place, is to reduce your costs, meaning keep more of your money on hand. Now, the banks give you loans based on how much debt you can manage. I want to make sure you hear
That's
me
your
on
credit
that.
score.
That's your credit score. Whereas life insurance companies give you access to cash based on what you have in your hand, what you have access to right now. Let me break that down a little bit further. So what I mean is, banks offer consumers various types of loans, right? Personal loans, mortgages, auto loans, business loans, whatever the case may be. And they provide these loans to individuals and businesses so that they can have funding, since they don't have it because they're asking for the funds anyway. Now, what happens when you get a loan from the bank is you have to pay principal and interest if your credit score says that you qualify for said loan, because that credit score is going to determine how much cash you have access to, and it's also going to determine your interest rate. So you are dependent on maintaining a credit score in order to get cash from the bank. Now, on the other hand, you have a whole life insurance policy, for example, and as long as you are paying your premiums into the whole life insurance policy, you are going to have access to capital where there is no credit check needed and there is no interest rate variation because there's no credit score system, right? So if you get your loan from an insurance company, every policyholder at that insurance company is probably going to have the same interest rate based off of when they requested that loan, because again, it's not going back and forth on this credit system. Whatever cash you have access to is the cash that is going to be available to you, and you just have to fill out a simple one-page document signing that you are requesting this funding, and you don't have to ask permission for it. Now, how does this reduce our cost? Is because we are paying significantly less interest to the insurance company versus the bank, because on any of our policy loans that we have requested, we have not paid over 4.5% for any of our financing needs.
At the end of the day, in order for you to reduce your costs, just like the banks, it's important for you to know the options that you have regarding your financial needs.
Absolutely.
Banks are closing branches because people are moving to digital. They're following a trend. On the other hand, the cost of inflation and interest rates increase, and what do? A lot of times we complain, but do something with the information that you have access to. If you can't beat them, join them.
So if you are ready to get a policy and start banking for yourself, then definitely click on the link below so that we can help you create the right plan for yourself and your family.
And also check out the next video where we talk about becoming your own bank while the others are collapsing.
Don't forget to own your own lifestyle.
Or someone else will.